All right, as every Sunday, let's look at what may move the market if and see if we're gonna have this strong rally that pretty much snapped a whole three losing weeks in a row for the markets here in the U.S. Let's see exactly if this is gonna at least sustain, or we are gonna see what we saw these last couple of months. Like we go way up and then we go way down, erasing everything that we've made as gains lately. So as usual, let's look at market indicators. Economic indicators and maybe some earnings that have the potential of moving the markets. Now, given what we had on the last 2 days of these weeks in terms of price action, closing strongly on Friday with everything above, 2.6, 2.73%, things might look a little bit like, because we are still in a bear market, this might seem like, people will start taking profits. But let's not jump into conclusion too quick, because whether you want to believe this rally will last or this is kind of a dead cat bouncing because we are in a bear market, you may not be as right as you think, because we do have not only economic indicators coming from the PCE, which is the personal consumption expenditure. The personal consumption expenditure is one of the main key indicator that the Federal Reserve, the U.S. Central Bank, is looking at when it comes to measuring inflation. So we're going to have the report for the month of May, because all these reports are always backed up 1 month. So we're going to have the May update for the PCE, and it will be released on Thursday, likely showing an acceleration on the PCE because of inflation has remained to be a lot more higher in the month of May based on the CPI data. Now, this might be already priced in, because the PCE always, transpire what the CPI shows, and specifically this being delayed 1 month. But maybe because it's already priced in, the market may still overreact based on the numbers we have if it comes a little bit higher than what the CPI data, came in a couple of weeks ago. So that's number one. Number two, we're going to have the US GDP growth for the final estimate for the first quarter. GDP growth is, gross domestic product. This, is a value of pretty much the whole, if you take all the goods or the services that companies are producing, businesses are producing, it means it gives you a measure of whether or not the economy is going forward, the economy is growing. But there has been a lot of fears around recession and inflation. So by the time now on Wednesday we'll get the release of this US GDP for the final estimate on the first quarter. If it's come below the 1.5%, which is the estimate as a contraction, it can accelerate a sell-off, because it means maybe recession is going to be here. Even though, don't get me wrong, recession doesn't necessarily mean a bad thing, because based on what we had in 2020 and 2021 as economic growth, it was just a matter of time before we get the economy to slowing down. I'm in the camp of people thinking that the economy will slow down just a little bit, but it will not be like a deep recession as a lot of people want, the market to think and are, believing. Just my opinion, all right? Now, another thing to look at is the PMI. The PMI is kind of like the CPI for companies, right? It gives them an update of, based on your manufacturing processes, based on, the amount of ingredients, the amount of input, the amount of goods you need to produce your, goods and then sell, has the price of those stuff as input for you also went up? Because if it did, then it means ultimately those companies will transfer those price hike into the consumer price, meaning maybe we get into this vicious cycle where inflation might not finally, go back down as quick as we want it to be. So something to also look at. And then finally, we do have GDP and inflation updates coming from the eurozone and also from Canada, because if you look at the calendar here, we do have on so Wednesday, US GDP growth rate for the final reading of Q1 2022. Then we also have the UK GDP growth rate, the Canada GDP growth rate, the Germany unemployment rate, and the Eurozone unemployment rate. So everything here ties directly to inflation and recession. So a lot of indicators to kind of, push the market into huge volatility coming this week. But as always, it's not because some of these indicators are bad that it means the market will tend to sell off, because remember, the market always tries to anticipate ahead of time. Now, something to also look at, because for the last months, cryptocurrencies have been giving us a lot of insights on how stocks will trade, which was totally not the case a couple of months ago, like even a year ago. All right. So as of now, Bitcoin is kind of holding a little bit above the 200,000 mark. Ethereum is back above 1,200, and a lot of other altcoins, and other coins in crypto space are already kind of maintaining recent gains. So usually, if crypto is up, then it means the market will be up, but it's still very early. I mean, it's like 3 p.m. Central right now as I'm recording this video. So I wouldn't be, quick to jump into conclusion, because as always, we need to see exactly how the future markets opens, and it does maybe around 5 p.m. Central. And based on that, see exactly how the trading session goes, based on how investors will digest all the information coming or already available by the time the market opens. So just to say that, be still very, 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 very on your toes. It doesn't matter if you want to day trade, swing trade, but as far as investing goes, just make sure, as I'm doing that, I have, my cash automatically set up in order to continue to DCA in both stocks and crypto, as I'm, want to accumulate as much in order to get prepared for the next bull run to come whenever that happens. But if you're day trading, swing trading, man, just be sure you're getting quick and you get out quick, just because of the high volatility. It's better to keep your capital, to keep your money, rather than just losing it all and waiting, how many months, God knows how much, to actually recover, that hard-earned money. So just my 2 cents as always, folks, and I will see you in the next one.